Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call Express. We are seeing mixed markets around the world as the August trade seems to be settling in. Europe, which has been oversold, is trying to bounce, while Asia has its first weaker session, as Tom Demark says the Shanghai could be just a day or two away from what could be a 10% correction.
Listen, I like to time the market as everyone else out there, and he's had some good calls, but he also said the S&P was going to fall 10-15% around 1880 before we went another 100 handles. So if you shorted just based on his call, you might have run out of some liquidity or became unsolvent. I'm not saying he's going to be right or wrong. All I'm saying is just take it with a grain of salt. And I still think the FXI acts strong, but you could be going about it two ways. One, as an active trader or a swing trader, you could be in it as long as it follows the 8 and 21-day moving average, which it's been doing, or monthly flows on a macro basis like we talked about in December. So if we do correct, you're still accumulating it, getting a good cost average. So at some point down the road, I do think it's higher. You look at the chart of the FXI real quick, and you will see, this is when it broke out above 36. It has come a long way, but it's above the 8-day, above the 21-day. If you are trading actively and he happens to be right short term, use this as your stop. Use 40-41. Or if you want to give it a little bit more room, give it to the 21-day. Okay? But overall, I think that this weekly chart is very healthy. I think that the breakout just started, and I stand behind what I think we could do. We could see is 44 to 46. In the half a year to year and a half to come, and I think you stay the course monthly, you could do just fine.
And turning to our markets, we had a decent bounce back yesterday, but the question remains, was it an oversold bounce, or do you think it can build?
No, that's the gazillion-dollar question,
yeah.
Right? The market's broke. It was kind of easier to see that the market was going to break at 1970-ish versus it kind of bounced back to 1950. And if you look here at the chart of the SPX, okay, I got to get it off here, right there, you'll see that it's on the weekly chart. It just broke a little bit, but we're going to the daily here. I'm not moving fast enough for everybody. This was when it broke the 1970. Here's when it sliced 1952. Yesterday, the bulls had enough power to break above 1937. So the question is, will they have enough power to, retest 1950? Not sure yet. At this point, futures are down a little bit. Let's see if we can hold 1921 as support, and then the pivot low from Friday is 1916. So here is your range. We're in August, and sometimes you get a sloppy range. Just know your price points.
And some stocks to watch today could be ones that went green early yesterday and seem to have go-to status, stocks like Facebook and Baidu.
Yes, early in the morning you saw like 4 or 5 stocks go green before the market wanted to, and then they powered ahead. They could be swing trades or just trades, and I think you should just be taking trades during this type of market. You look here at Facebook, grinded lowest since earnings and turned up yesterday. So I don't know if momentum's going to come back, but now you could trade long versus 71.55. Baidu also had a great earnings report. It's been a strong name. This too held the earnings gap, went green first, extended, so you could perhaps be long versus 210. I'm not sure if you're going to get momentum above 220, but ultimately both those stocks went green and had some follow through.
Yeah, and even stocks like Wynn and Tesla have been acting decent since earnings and went green early yesterday as well.
Yep, and Tesla surprisingly acted very well after its earnings report, considering the market doesn't like high valuation stocks. So that could tell you something. So you look at the chart of Tesla, and looks pretty darn good, right? It triggered above this area, which was about 232 on earnings, had some follow through yesterday. I'd say as long as it holds 235, stay with it. Perhaps it could go above 240.50 if the market gets some traction today. Then you have 244, and like you said, Wynn, not a momentum name, but the best acting casino name. We talked about it holding 208. It did. If the market goes green today, maybe it gets above 214 to get back towards 220. This is something that could build a nice pattern as well.
And then, of course, there are still some stocks that are trying to figure things out, though, for themselves. Stocks like Apple, which we've been talking about how strong it's been, but for the short term, it seems like it's still not sure what it wants to do.
Yes, it's been in a very strong trend, and I still think the high of the year is not in, but over the next few days, if the market gets weaker, it's a little vulnerable. If you look here, you know what? Just showing the chart, here's your trend. It's hugging that trend. If you're very super active and you want to look, to get rid of it, if you're long it below 94.81 and closes below, okay, but you better make sure that the 50-day, if that holds, you get back in it. And if you're looking to be short, maybe that's your spot. If it goes sideways and shows relative strength today, above 96.62, perhaps it starts acting better. But right now it's hugging that trend line, so watch that closely for market direction and for Apple's direction.
And that's your Morning Call Express. Happy trading. Have a great day.